The essence of sustainable investing is incorporating environmental, social and governance factors into the investment decision. Companies with strong ESG integration recognize the importance of managing risks and opportunities associated with environmental challenges such as climate change or social challenges such as shifting consumer attitudes. Well, you can do financially well while doing good. First, very rational. The clear predominant number of empirical studies show that long-term, investors can achieve a market-aligned or even better performance than with so-called normal investments. This is because sound environmental, social and governance company practices are shown to be associated with lower cost of capital, better operational performance, more innovation and hence positive long-term stock price returns. Companies that display unethical behavior such as bribery or corruption or poor governance regimes are out of a sustainable investment universe, as well as bonds issued by governments and countries that do not observe the Convention of Human Rights. This elimination of countries and companies with poor governance reduces the risk of a portfolio. And second, through sustainable investment, you support innovative solutions for the environment and social challenges. All have specific own personal values when it comes to environmental and social. Investors can align their investments with their personal values, or foundations can align the foundation's missions with their investments and, among others, also prevent bad reputation. I think it very much depends who you are and your personal values. You can align your personal values with your investments. For example, if you're supporting a foundation that protects animals, you can exclude companies that do abuse animals or are known to abuse animals. For me, the most important area to focus on is the G of E, S and G. Without a good governance, there is no certainty that a current good environmental and social scoring will remain. Just to recall a bit of theory, corporate governance is the process and structure for overseeing the management of a company. So corporate failures and scandals have been a powerful driver for the formalization of corporate governance, and these days still is. You all remember basically the Volkswagen diesel scandal only a few years ago and what it meant for the shareholder as well as the company. Companies with poor governance risk really destroying value for investors. What's important about E, S and G, and what can you do? I think it's important that first and foremost a sound and very transparent investment process is key. This across asset classes. Sustainable investment is not only equities. The focus should be on the clear ESG leaders within a specific sector. By additionally investing in certain themes, you can support innovations that can solve future environmental and social challenges. So, solutions, for example, for sustainable packaging, electric vehicle or storage of renewable energies. Just in general, to support the transition to a low-carbon economy, or in the case of the S, to fight against inequalities. So, by investing your money in sustainable products, you put your money to work for something meaningful.